It will be your very best friend if you let it be.
Let me into my zone. Please don't let me into my zone. 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 Please don't let me.
Well, welcome back to Krown's Crypto Cave. 3 cups of coffee down, drop the kids off at the pool, and we are ready to go once again. It is absolutely snowing and frigid in Helsinki, Finland right now. It's literally the middle of April, so that gives you an idea of where we're coming from. It's a great north, baby, and more importantly, we got plenty to talk about on not just actual price action, as we're starting to see a lot of things fall through from what we've been speaking about for the last couple of weeks, but also I have a few announcements with the Krown trading application. But before we get into that, I do need to talk about the Discord, which you probably noticed that there's a new whole setup with the Discord. For all the people who are joining, you're going to be prompted by a private message by our nice bot Sentinel alt identifier, and you have to go through that sort of verification process in order to gain access to like the general Discord community. It's really easy to do. I know it's a little bit inconvenient. I know it's also quite annoying as well, but at the end of the day, it does create a better community for everyone. So it is for the better of the group. On top of that, I should also say that the people in the programs, you don't need to do anything. You probably already figured this one out, but please do not leave the server unless you actually want to leave the server. I'm not here to fucking handcuff you or anything like that. But assuming that you're listening to that past blurb, you don't need to do that. It's just going to create more work for both yourself and myself, and we probably don't want either of that. So with that said, I should also say that, if you were already a part of the Discord and you're wondering where all of the channels went and everything, what you're going to have to do is you're going to actually have to leave the Discord server completely and then rejoin the server. There's obviously a link in the description below for the Discord. I believe it's maybe like the first link, and then also on crowntrader.net if that for whatever reason doesn't work, which should. And then you'll be prompted with that private message. So keep an eye out from it and just follow the directions. It'll only take a minute, but yes, necessary for right now. Other than that, I want to now talk about the Krown trading application, which can be found at app.crowntrading.net. I did get news from the developer who is now confirmed to actually have coronavirus. He does seem to be in really good spirits though, so that's a really good sign. And it sounds like his wife is also recovered as well, who was confirmed to have it. So hopefully he gets out of quarantine soon. And then, what you're probably most interested in is that the open interest chart will be in the next update. So I assume that once that whole process is over, I don't know how long it's going to take. I would imagine, maybe at most like a couple weeks or something like that. Then it'll just be a matter of pushing the update. He literally went into quarantine like one day before we were going to post that update, and then there's another update to come with the beginners. That'll reveal a little bit later. Anyways, for right now, what else do I want to say? Let's actually. Oh, that's right, Twitch. Twitch. I will be on later today on Twitch, doing the same old. Of course, the focus is on gaming and in more immediate price action. So not gonna be like talking about super historical things or anything like that. It's really not the focus there. So if that's what you're interested in, it's just probably a conflict of interest there. No harm, no foul, but probably not going to be applicable to you. But if you're just there to hang out, have a shoot the shit, and have a silly goose time, well, that's what it's all about. Anyways, looking at the Krown trading app, we do see that open interest is once again but is above 700 million for the first time in a while. Yes, we did kind of break the barrier a few days ago, but now it seems to be a little more sustained alongside a breakdown in price action. So we're really seeing a change of behavior here, precipitated by what was really precipitated firstly by historical volatility percentile. That's the fucking volume, looking at that one, and then also further verified next by the open interest, another derivative price action, and that going above this level, kind of breaking another barrier as the shorter term time frames start to actually get follow through, does really add efficacy into this move playing out. So with that said, let's get into our actual price action charts right on over here. Starting off with the do we want to start off with the daily? Is this a daily? Hold on, let me just make sure that I'm recording. I am recording. Microphone's working as well. We're 4 minutes in, so that's really good. That's like a new record. Anyways, looking at this right here, we actually did fully and formally close below the yellow 21 exponential moving average on the daily, and to me now I play this to the downside as long as we're below the yellow 21. Now of course, covering up for the lower term time frames right in over here, we do see that the 4 hour actually did close healthily below, I should say, that blue box territory, heading into our next blue box territory, wicking off right above 64.50ish region, and now playing out a little bit of an anemic bounce. It looks like volume on this move still suggests that we are in the midst of this move. I don't think that this is a hammer dildo that's going to get all that much follow through, but at the end of the day, what is the narrative that I'd be going off of? Well, I do think that from a medium time frame perspective now, I don't really have any reason to be bullish on this price action. No longer, it doesn't need to get back above 73 or 7400 any longer, but specifically about 7150-ish region right here. If it get back above that region, that would look good for some medium term continuation. into our higher levels. Higher term timeframes and macro term timeframes, still 7,300 on a higher time frame close would make me bullish, at least for a move to like 7,900 to 8,000. But as I've been saying for a while, my bias is to the downside. My bias boner is strong, and at the end of the day, it's all a game of statistics and probability. So we'll be looking at the probabilistic outcome of these events, with the next sort of fall through momentum moves. From a short-term perspective, though, the next resistance, we're kind of testing it right now at 6750-ish region. If we can close a 4-hour dildo above, well, do we want to make it a little bit higher? Do we want to be more conservative? I guess you can be a little bit more aggressive on a lower term time frame, but anywhere above, especially the 21 exponential moving average, which is going to be naturally coming down below this region, probably on the next tick, maybe 2 ticks. I would remain overall bearish. However, if it were to break back above, that wouldn't change anything for me, except for the lower term timeframes, targeting move back up towards the $7,000 region, somewhere around 7,100-ish region. So other than that, there's not really, I'm not really looking for that to happen or anything like that. We'll look at, like I said, we'll look at probabilities later, but I do believe that we're starting to set into motion the events. Now, here's the thing. There is a competing narrative here, which is relevant to be showing. We do see that, obviously Bear is going to be looking at this as a breakdown of the greater whole, and I do believe that this is the right way to be looking at things, as we do have this one massive rising channel here going in from the lows of March 13th to where we are right now, which is further verified by the volume signature on this, which is further enhanced by our look at the open interest, which had basically gone all the way from north of 1 billion to down to about 500 million on the whole drop from this portion to this portion right here, and then from March 13th to where we are right now, kind of ish, you saw that that effect was kind of curtailing off. And what happens after that? Well, once price action starts to turn back down again, kind of continuing that trend, we do see that open interest starts to move back up into levels that we haven't seen since the last trending move. So I do like that overall. And of course, volatility was the first signal that was giving us that. So this is the beauty and using something like this, as it does precipitate all the other notions. We saw a nice contraction phase going all the way from here. Of course, March 13th, where we are right now, we have this nice trend line, or do we have this nice trend line? We actually don't. I must have deleted that chart, or maybe I made it on a different time frame as well for this exchange. I probably did it on BitMEX or something like that. And after that, we do see that we had a change of behavior right here after this apex was reached, and then a new trend gaining more and more momentum from a volatility perspective, expansion phase, what we're looking at to the upside. So I do believe that that was kind of the initial phase of that, and that's what was kind of driving my bearish bias, in the short, medium, and higher term time frames, as long as we're kind of held back by those critical levels. Also, on top of that, we do see, there's so much to fucking talk about right here. We do see that now all major moving averages on our 4-hour time frame, which is not all that important, but it's kind of like the lowest time frame that I think actually holds weight with like a decent size move, $500 moves plus. We do see a full-on bearish split effect of all major moving averages, all lower periods trading below higher periods, and more importantly, the death cross moving averages are starting to get more and more momentum away from each other, which the way that I play this now, and yes, I am still short from my $7,200 position from sometime like last week, I think it was, or 72 or whatever the fuck it was. I forget. Let me go check. 7,200, 7,219. Anyways, that still holds my bias right there. And I play this to the downside as long as we're below the yellow 21 exponential moving average on the 4-hour time frame. The reason why I do that is because I do really like this kind of this kind of like touch and go right here, fake out, as again, not to go through the whole spiel, but it's very, 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 very common practice for much more sophisticated bots to take advantage of less sophisticated bots by, causing them to front run silly moves before they're confirmed. And as you can see right here, this one technically was confirmed for a little bit, but you really wanted to see the test down to the cross, and of course that just broke right through on the first pass. More importantly, we didn't even see the same sort of setup on CMEs, which I look at as the more important chart. It never even got close to getting golden crossed right here, but again, I'm having the focus on the green and the purple, 55 and 200, and we've seen several examples of this in the past. Usually when you get a nice cross, it carries on that momentum for quite some time, and whenever you get these fake out crosses, we do have a lot of examples of what's happened in the past. A good kind of case study would be this area right on over here in August to September of 2019. You get the death cross, and then several hints at the upwards cross, even a nice kiss and go right here as well, and again right here, and then the same thing in 2018, 2019. These usually comes through big phase shifts, and now that we're getting follow through on top of that, alongside trend kind of further confirming, plus all the other metrics that we've been looking at, I do think that we're going to follow through in this direction overall, after kind of playing out this short-term bounce that we're looking at right now. But all these areas get hinted at And then once it finally gets some actual divergence away from each other, we do see that the 21 just governs the move the whole way through pretty much until the actual low is put in. So I look at the 21 as kind of likely to govern this move, and I don't really have any reason to believe it's even over from a short-term perspective as long as we are living below that. Another good case study is back on over here in 2018. Several examples of one-offs. Even these failed ones had like actual good moves if you were to trade them from the next test to the next high. Like 870 is pretty decent for a percentage gainer, especially within like the next 2 days. I mean, that's pretty fucking phenomenal. Then several examples right in over here in 2018 before the actual inevitable breakdown in this nice redistribution pattern of a descending triangle on the lows. Anyways, as you can see, it trends to the downside pretty much the whole way through as long as we're below the 21. Yes, there is a one-off right here, but I do think that, it's good enough for me at least to manage positions on as it stands. Doesn't mean that's always going to be infallible or anything like that, but I like it for now. Anyways, momentum also is coming down with it, even on lower term timeframes. We do see 4-hour stochs crossing all the way down as we break that major area that we saw on the, well, I guess not on this chart, it's on this chart right here. This major area, this blue box right around about 6,700 that we spoke about yesterday. Now, this is where I really want to focus on because while I've spoken a lot about the 4-hour, it's really the daily. There's so much to say about the daily right here. So on the daily, let's put back a few of these babies on. Let's go like that. So as long as below the 21, the yellow moving average right here, I do look at this as momentum to the downside. We see negative slopes on pretty much every major moving average on the board right now, which is what you would expect. And we have a pretty good insight of what's going on just from that. But momentum also does further confirm alongside a breakdown in price action. So with that move last night, breaking below here and closing the daily total below 6,700, more importantly, we now have once again a downtrend in progress. This is alongside momentum oscillators still moving to the downside. Not only that, but we do see that daily RSI back testing around the bearish control zone, living below the exponential. Doesn't mean it can't pop back up, but I do look at this as likely the rising channel breaking to the downside, which does have a measured move actually much further south, although it's not as south as I once thought now because it's more so a measured move, no longer of 4,900, but about like 5,000, because it didn't, it broke a little bit later, and naturally, the longer that you kind of slide along this, the more and more high that level is going to get. So yes, technically speaking, there is a measured move all the way down there. I should also say though that, I do think that there's going to be bounce along the way. Of course, well, first off, the one that we're kind of looking at right now at about 64.50-ish region. That means if we come back down around there, I probably wouldn't be looking for it to bounce it again, at least on a medium or higher term time frame, just on lower term time frames. And then below that, I'd be looking at about 5,900 right here. We can actually probably tighten this one up a little bit, as it is a little bit of a shorter range. If we just look at the liquid zone from a daily perspective, something like that would be about right. Then I'd be looking at a move towards 5,600, and then yes, the full on measure move all the way down to 5,000. What's interesting now though is that even if we did get down to 5,000 on a closing basis, we would not have lower lows as far as the daily goes. So I actually can't get too bear, or at least I don't have anything that causes me to get too bearish, like looking for new lows on this whole run. As it stands right now, it doesn't mean that it can't come up later. Like we can get all the way down there and then put in another formation and then have a continuation pattern. Yes, absolutely. But as it stands right now, I do think that would be very premature to join like the full on bears of the market, saying that Bitcoin's going to fucking zero and there's no ands, ifs, or buts about it. This is not about fucking crystal ball bullshit. This is about trading, which is just really, in the way that I do it, is going level to level. There's a million goddamn ways to trade, but that's the way that I've found best works with my sort of unique, maybe not so unique strategy, but trading supported resistance, not all that fucking unique now, is it? Anyways, on top of this, we also do see the other big thing that we were looking at coming into today as well. We see the good old McDonald's indicator also confirming, not necessarily confirming, but almost there to confirming, probably 1 day away from confirming another cross to the downside. Now, of course, as I've been saying, that's not the way to be using it. This indicator is actually fine. I've given it a lot of shit in the past. Now I'm getting actual shit for like giving it shit, which is kind of funny. Very strange, bizarre things going on in this market. People maybe having a little bit too much free time in their hands. But anyways, looking at this right here, we do see that is going to come alongside a break in structure, more importantly. So a break in structure, meaning this redistribution pattern right here, this rising channel, alongside momentum curtailing back to the downside, which it technically is not confirmed just yet. But look look at the whole read of the daily MACD. We do see that the whole move from February to March 13th was gaining momentum the whole way down, and then it gets to extremes. I mean, we really haven't seen like an extreme like this since. I mean, shit, we haven't seen an extreme like this since literally 2 years ago in 2018, right? I guess that would be about 2 years ago, a little bit more than 2 years ago. And that was to give insight. That was on the whole move down from 20,000 down to 6,000 on that first strike. Now, probably someone's going to say, "But Krown, that means that we're probably bottoming over here." Well, no. Look at the read on here. The convergence on this was suggesting that we were losing momentum. Of course, this one gaining momentum, and then to the upside on kind of like the counter read, we do see that it's actually a loss of momentum right here, putting in lower highs on the histogram, while price action puts in higher highs on price action puts on higher highs. So this is one of the few times where MACD divergence is going to be more important, or histogram divergence is going to be more important than RSI divergence. We actually do have it here. Do we have it here? Hold on, let me just measure it up. Yeah, we do. Very, very slight. It's obviously it's more obvious on the MACD, to be fair. So this is the value. Looking at a bunch of different indicators, but again, breaking actual major areas. Plus momentum also just turning down, plus just a loss of momentum here, regardless of the fact. I mean, this is a pretty classic signal where you have a big momentum gaining move to the downside, and then you pop up just to the zero read. In fact, I'm curious what it did over here on that last sort of similar read. Yeah, you actually had a contraction phase right here, crosses back up, comes up around the zero marker, gets a little bit above, but puts in that same sort of bearish divergence here, and a really, really obvious one between this point and this point, actually, which again was better actually seen by, or more easily seen by the MACD. Actually wasn't even present on daily RSI. So you know what? I do need to go back and say that I've given this indicator a little bit more of a bad rap than I think it really deserves. I think the reason why I've done that in the past just because it's a very misunderstood indicator. It's not that it's bad, and of course I use moving averages myself, so I mean that's what's essentially making this one up. So at the end of the day, it's fine, but I feel like you can just be fucking super easily misheard on the internet, and it's just like very bizarre. But overall, that's actually kind of what we're looking at. So it is interesting, and it actually does offer up a little bit of a more unique look right there that we did not see from our other momentum oscillators, which I typically use the RSI for. So fair enough. And now that we're living below the 21. I would look for that I would look for that next cross to really actually bring about a big shift in momentum to the downside, bringing us back down to a little bit below 6,000, probably at the very least. Overall, it doesn't mean it's going to happen at the snap of a Nicholas Martin's fingers, but it will happen. I shouldn't say it will happen, but I would be looking for it to happen, over the next medium term of price action. Call it like a week or two. I don't do time analysis. I don't think time analysis can really be done, but looking at the historical volatility percentile read, especially on our lower term timeframes, we're set to expand once again. So it's not until we really see the 4 hour getting back above into like the 80 plus marker where I think that this move is probably going to find at the very least like a short term bottom before a nice big bounce up. And realistically, I think that we're seeing our first short term bounce up right now. So fair enough. Does this get a little bit higher towards 67.50? I think that that'd be fine. I think it's actually rather likely as well. But overall, I'd be looking for this to likely curl back down around, as we do see our higher term time frame momentum oscillators really start to take over once again. We see 12-hour Stokes, which have been the fucking dominant of this market, turning back down around right now. Now this is a little bit of a weak cross right here, and we are right on this trend line, but bouncing on this trend line already and kind of coming back down immediately is not a sign of strength at all. So this next tick is actually very important. I want to see if the K and the D open back up, or if they do start to get a little bit closer to each other. Let's look at our reverse Stoke indicator and see what would be needed for price action to close at on this next closure in 5 hours and 22 minutes and 21 seconds for these babies to cross back up to the upside, and it would be 67.25. So that's actually very much within the realm of possibility. So do need to keep an open mind here, but I do believe that there is pressure down. And check this out as well. We see a full-on contraction on the 12 hours. So you know what? On the 4 hour looks to me like it's ready, like it's set to expand and kind of like continue that trending expanding move, which would suggest like within this next few days of price action, we probably do get a nice move. The 12 hour further confirms this, and more importantly, really puts a fucking nail in that, as this next expansion phase will be very, 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 very violent, as anytime that we've had a contraction phase for, this again is about a little bit more than a month on a higher time frame like this. I mean, let's find a good I like to find a good interplay. Here's the last one that really mirrors what we're doing right now. Something like this. This one was a contraction phase all the way from November to middle of January, so about a month and a half. And then that was, by the way, January 2019, before this whole big massive move to the upside. So it doesn't give us direction, but it does say that expansion phase is very likely to come. Momentum oscillators are better for the direction, and trend also better as well. And right now, the trend being your friend, if you let it be, seems to be a little bit more on the generous side as these things line up. So I do like that. Not only that, but we also see 2-day Stokes confirming, not necessarily confirming, but definitely hinting at another cross to the downside. This to me is pretty damning, as I do like this for a more medium and long-term direction, especially coupled with our daily, which is already down as we've been speaking about. By the way, it does have a trend line kind of, forcing its way over here, to be fair. And then also the 12-hour as well, which actually has that same trend line, of course, because it's going to be some corollary of it. All on the same side. That's usually when the magic happens, as far as I'm concerned. And so to me, this looks like the probabilities are certainly going to be on the downside, as we've been saying for a while now. I really have no reason to even look at this as potentially a trap, even like a bear trap, as long as we're below the daily 21 and by further extension the 2-day 21. The reason why I say that is because now we do have this lovely death cross going on right and over here, which we've been focusing on so much, and I've gotten so much shit for, which is kind of funny, man. I think it's more just being like misunderstood and whatnot. But the relevancy of this, again, is to get insight in what the big bots and algos are doing. And it's also had a pretty damn good history in Bitcoin land. We do see that these two major moving averages are having good divergence away from each other. So it's strengthening as the bots and algos increase their selling programs. And then as long as Bitcoin's below the 21, I play it as, in the motion of trending, essentially. Again, doesn't mean it can't pop back above, but as you can see, if Bitcoin were to get back above, even to the 21, we'd still just be in line with the overall downtrend. In fact, looking at a trend line going in from our highs where we are right now, you can see that is, well, you can see it right there. Anyways, I'm going to get rid of that. I don't really care too much for diagonals. Again, doesn't mean that they don't work, but if they're going to work, they line up with horizontals anyways, and we obviously see a level in that region. So going throughout the handles of history, of course, great, glorious cross right here to the upside, 7,000 to 14,000. Amazing cross to the downside right and over here. In fact, this one relatively similar. We do see the death cross slowly but surely kind of edge its way down. Again, for reference, it takes about 2 to 3 months from this cross to major death below, and there is a big test up to the 55 in between there, which is actually going to be mirrored by the other example that we can look at as well. So as long as we're below the 21, it is pressure down. Doesn't mean it's going to just fall off the face of the earth, but it does make me biased here. My bias boner is very, very, very erect. Not flaccid right now, but very erect. And we do see that this move about 51% to the downside, which is pretty much in line with the last example that we have as well, going back on over here to 2014, 2015. Similar kind of price action of what we're doing right now as well. Bitcoin very far away from the actual cross itself, pops back up to test 55, in this case even the 200. So I do want to keep the door open for a move back up to 78, 79, especially if that condition is met with at least a 4-hour, 12-hour total closure above let's call it 7350-ish region, above our current high. That would probably do it. But as long as below the 21, it's pressure down here, and the 21 does have once the 21 gets a negative slope from this point to next low, 53% down, 53% down. So pretty damning right there. And what do you know? We are getting rejected by the 21 thus far. I think this is further confirmed by the 2-day on CMEs. To be fair, the 2-day on CMEs not having that much history on it doesn't really help its case, but it looks a lot more like your traditional cross or your traditional death cross here, gaining momentum as all major moving averages have a negative slope, except for the 10 simple, but fuck that one. Just kidding. But same thing here, 21 maintains the negative slope after having a slightly neutral one right here. And just playing with numbers, if we were to shave off 50% from this is the only thing that I do have that points us lower back down towards 3550, which is of interest because it is right in this last accumulation zone from a macro scale. And at that point, we actually would be hitting the weekly 377 exponential average, which is incredibly important for a long-term trending aspect from myself that I've seen in traditional markets. A lot of just a classic area for long-term accumulators to kind of buy into. So if it did come back down and test around this region, we kind of already did actually on that last major down, depending upon which exchange you're looking at. I would look at that as another opportunity, most likely for potentially a long trade possible. Same thing on daily CMEs. We do see that there is a nice gap down here in that same region, coming in from where? Coming in from 3550-ish region. So we do have some things pointed down there, but like I said, first things first. Break fucking 5,000 and then I could get interested in that. And of course, at the end of the day, could it be that Bitcoin, does reverse off of one of these blue boxes in the interim? Yeah, there's always a possibility. Do I think that it's likely? No, not really, but it's there, there's always a possibility, and that's why I go blue box to blue box, kind of just governing the overall trend. So as long as we are being held by, by the prior one, trend still, more immediately down, and can judge it pretty easily by that, by that metric. And the second that we actually make a higher high on, on a time frame that actually matters, then perhaps we might actually have a trap, but not until then. I do think that this move right here is just your classic bullshit, what is it called? Candlestick traders, or dildo traders, whatever the fuck you want to call them. You typically would look at this in traditional markets or Forex as a hammer dildo, and we're ready to go up, and it probably is going to travel a little bit further north here, maybe another like 50, $100 to the upside, 67.50. I don't think it's too out of reach, but that doesn't do anything for price action as far as the trend goes, and I would look at that as just another area for price to get redistributed on. Other than that, what else do we want to talk about? It's already been 25 minutes. What the fuck? What the actual fuck? Maybe take a quick look at the 3-day. Do we have anything new here? 3-day looks like more of a rejection of the 21, as technically a 3-day dildo death cross is going to be in motion sometime in like middle of May, but that's well and far away, and I don't really trust that one all that much. We don't really have too much good of a history of looking at that one, to be quite forthright. I mean, this one over here was like very far away from price action. This one would obviously be a lot closer, but again, I don't think that the focus is really on there. Still looking at the weekly, we do see all major moving average cross to the downside right here. As far as the lower periods go, 10 below the 21, 21 below the 55. We do have a few examples of what's happened both to the upside right and over here. Beautiful move. To the downside right and over here. And again, this is coming off of a test of this whole cross in that way. And if we do go to our Bitstamp chart, we can even see the prior example before that. Same thing right and over here. Gets a test up to the 55 or 21, I guess is more accurate. And then boom, massive move to the downside. Works the same to the upside, and absolutely lovely. Alongside momentum oscillators, still technically down, but not that strong down. And to be fair, unless the price action really fucking accelerates to the downside here, we will see weekly Stokes cross back up to the upside. Put in perspective, 57.20. We need to close below 57.20 on Sunday at 8 p.m. Eastern time in order for those to maintain their downward posturing. Now, I would also say that weekly RSI is certainly more bearish here, but it does seem like maybe we are in some long-term channel, although, and what's up, Scuba Kid? Good to meet you, man. Welcome to the cave. Good to have you here. But it kind of does look like perhaps a channel is in the formation here for the long term, something like this. We do have 3-ish touches to the top side, not so, not as much, but it is nice and parallel, so I do like the symmetry there. And more importantly, we're getting rejected from getting out of the bearish control zone. So do we come back down a little bit more, maybe put in some divergence overall, and that's the low? Perhaps yes, but again, an open mind, this is a little bit too far away for me to really care for like an actionable trade. This is more like analysis bullshit, which is cool to look at, but this is not important for my trading. Looking at the monthly, same thing here. I play it long-term bearish as long as we're below the 21 here at the yellow moving average. Just what I use in traditional markets to judge if someone was generally bullish or generally bearish, and the 10 symbol getting a very negative slope. I mean, with price action below there and the 10 symbol getting a negative slope, that's not been good historically speaking for Bitcoin. Momentum oscillators on the monthly as well, very much angled to the downside, and for perspective, we would need to close above 84.33 in order for that to cross back up. Monthly RSI looks to me like it has a good history of coming in, testing around the bearish control zone on these major macro lows. Last one coming in at Jan 19. The one before that, Jan 15. Does seem like it likes that January month, but 2 times does not make a trend. 3 times does, and maybe we have a third one in the making. But yeah, these areas right here, this area right here, and perhaps once again, although I am skeptical if we do come back down around there, for a third time, we'll cross that bridge when we get there, or whatever the fuck it is. Do you want to look at CMEs really quick? I think we kind of already did. CMEs look a little bit more bouncy than spot. But same areas still apply here. I do think that we're probably going to bounce up a little bit more shorter term, 6750, 6770-ish region. And then if bears want to pile back on in, that's where I look for it to come from. Very easy to manage as well. Let's go take a look at traditional markets. We see NASDAQ futures doing what? Popping back up, it looks like. Looks like it's going to make a run for the last prior high at 8,700 once again. This is still trending pretty damn hard to the upside. I'm not sure if I would be bearish on this right here. I'm not sure I'd be bearish on this here. It would not take much to get it up to 8,900 as well. Now, I'm not necessarily saying that I'm like full on bullish on this either, like looking for new all-time highs. It seems like a lot of money managers are kind of saying right now, but I do think that short term probably has a little bit more upside. We'll come back and analyze it again, as I don't feel all that confident on this right now. E-mini futures, SPY futures, looking about the same. I do think that's going to pop back up around 2830, 2820-ish region, in line with what would be akin to like 282, 283 on SPY itself. But this one looking a little more toppy to me than that, and this one does hold more weight, at least in my opinion. The daily looking actually a lot more obviously toppy, so I do think that we're going to get another test a little bit above 2800, and then from there I don't really have a strong opinion. In fact, I really don't want to say anything more than that, because I don't think that that's appropriate. Daily on SPY spot looks a lot more, Jesus Christ, what the fuck was that? Looks a lot more obviously bearish to me, looking for some short-term down. But again, I don't feel confident here. I do think that it's going to play out some upside, probably in line with what the futures are suggesting right now, but futures are notoriously a fake out. And I do think that SPY is going to come back down and base around like 267-ish region before this is all said and done. That should be the next, the next nice pivot, if you want to call it that. As Elsa wakes up and walks to the bathroom. Nice one. You're doing well. You're doing well. Let's go check out gold. We've been bullish on gold for a while. I'd still be bullish on it. Let's take off log scale. Don't really need it here. Don't need that bullshit here. And I do think that longer term, I still think 1800-ish region. I have no reason to be bearish on this as long as we're closing weeklies above 1676. And doesn't mean it can't happen. But with 1 day left to go in the trading week, looking good for right now. We've all seen crazy things happen, but the breakout looks real to me here. Looks fine. As it is. Let's go check out GBTC. Haven't looked at this one on video for a while as well. Looks like a nice little breakdown as well. I don't really see anything too much of interest here. Momentum oscillators have a lot more to go, to be fair, and daily RSI is significantly more bearish than spot price action. I'm curious. I didn't really look at oscillators for CMEs. CME is about the same read. We do see that daily RSI below this region, and I would imagine that the cross for that is going to need another $100 or so to the upside. So again, it doesn't mean that it can't happen, but I wouldn't be calling, like, I have no reason to believe that this is a fake out back up to the upside. As long as we're below, let's call it like 60, especially 6,800, but really like 6,750-ish region. Stokes here obviously have a lot more downside as well, showing that we'd have to go back above about 7320-ish region in order to cross these baby back up to the upside. So I do look at this as more, I still stick with what I've been saying. I do think that Bitcoin is just more or less kind of sliding down the stripper pole to the downside. It's a slow molasses-like move, kind of similar to what we've seen in the past. Perhaps a good interplay would be right here. I think that this was rather similar, where Bitcoin was, gets an initial breakdown and then slowly but surely just kind of distributes all over your face. And at the end of the day, the trend is your friend until the end of the trend. And just following simple trend here, what do we have? Lower highs and lower lows, all the way up to, I believe, even a daily. Yeah, well, kind of. I'm sure people are calling this a head and shoulders too. I don't know if I'd define it as such, but at the end of the day, the fucking implication's the same. Like, Jesus Christ. Excuse me, it's not. It's like, Jesus fucking Christ. Let's see, what are the other majors doing? Or actually, let's go look at probabilities on Bitcoin as well. Let's go back down to the 4 hour. And again, I don't really have any reason to believe this is a fake out as long as we're especially below the 200 exponential moving average. So I'll take a more conservative route to this. Of course, lower term time frames though, 6750-ish region. But when I look at this on the daily, I want to see 6950 at the very least. To the downside, there's not really like a good way of doing this because I think that we're in the process of trending right now. But I suppose the next major area would be about 6400. If we do break that, I'd look for a full on extension, another $500 lower to 59. So let's see what the good old maths say. And I have some more cool Bali tools to be bringing you relatively soon. However, I need to learn them myself a little bit better before I talk about them on stream. Anyways, before we get into that, I do want to quickly point out, yesterday I had the probabilities wrong. I was on a weekly chart, not a daily. My bad. Sometimes I don't get enough sleep and I just say all kinds of dumb shit. And I'm sure that'll happen many more times in my life. So fair enough. Anyways, looking at this, the probability of the upside now, the 7,400 target for like the higher term times, we can even move this down to like 7,300 now too. Because remember, that's what it needs for like the medium and high, or the higher term time frames, the macro time frames. That's a very low probability, 2.7%. Probability that will close above there today. So very unlikely. I don't think that we're looking at a fake out, but even that's not needed. You know, even I would say like 69.50 on a more aggressive stance. And that actually does have a decent enough probability, about a little bit less than 19% for the downside. For the downside, let's see, 60. I guess we can use 64 now. To me, this is trending though, so I don't really look at this as like anything more than just kind of plotting short-term pivot areas, but showing about 6,400, which is right in the midst of this next blue box that we're looking at. If we do break below there, which is technically a 19.25% chance, which is relatively high, actually a lot more higher, or I wouldn't say a lot more, but a decent amount higher than, it's barely fucking higher than the above target probability. But remember, that's for like a full-on fake out. Then I would be looking for this to come all the way back down below 6,000 to 5,900-ish region. So, you know, it is like basically kind of looking at what the probability of the move is happening today, which is reasonably probable. And as we've been looking at, has slowly but surely gotten more and more momentum in that way. We do see that the rings on this baby are collapsing on each other and now severely angled to the downside. So what we've been saying for like the last, actually auto this right there. What we've been saying for like the last few weeks is, you know, the longer that Bitcoin goes sideways here without really breaking above that 73 to 7,400 marker, the more and more inherently bearish it will get. And, you know, this is further verified by the historical volatility percentile read. So I do like this. What else do we want to look at? We could look at the very short term as well. I don't think that this is like too relevant, but 67.50, obviously this is going to have like a much higher probability. This would only be relevant to the short term timeframes, 39.64%. So, you know, could Bitcoin easily have a short term pop back up to like 16 or $7,000? Yeah, it's within the cards, but I'm not even really looking for that to happen. So fair enough. All right, cool. Okay, what else do we want to talk about? I think I've spoken your head off enough already. Let's maybe go check out a couple of the top shitcoins here. Mr. Buterol to start it off, looking like he's following through on Bitcoin's footsteps. Not as aggressively though, to be fair. Just barely closing below the 21 right there yesterday night. What about Mrs. Litecoin? Or sorry, wrong one. A lot more inherently bearish. In fact, almost hitting our next target of about $37. Hit our short-term target of 39.5, obviously, but the next area that I'd really be looking for is like 36.5. This one looking again, as long as it's below the 21, I just don't see any real reason to get excited about this one being some sort of a fake out, as I'm sure that's what a lot of people are talking about right now. Well, who knows what the fuck people are talking about. Anyways, let's go back to Bitcoin and wrap this baby up. Short term, 67.50 the upside. If we do take that out, I'd look for a full on retest of like 7,000, 69.50 to 7,000-ish region. This is only short term bullshit. You know, $200 move for that, for that on like a 2 hours, probably fine. But I don't think that that's what we're doing. I think that we will pop up maybe a little bit more here, 67.50. But as long as we're riding the 21 to the downside, I look for this to slowly but surely just ebb its way forwards, somewhere back down around this blue box, 6,400, maybe another small anemic bounce there again. But ultimately, I do think that that will get sold into, and 5,900 would be the next area that I look towards. This is, you know, that's a $600 move ish on a little bit below $6,000 number. That's almost a 10% move, so it's very much tradable. Anyways, other than that, I think it's gonna be just a nice, slow, gradual day. Maybe Bitcoin will be gentle if you let it be. Other than that, I'll be back on Twitch a little bit later, and for now, I am gonna be signing off. I'm gonna go eat a shit ton of lamb, which I'm really excited about. And with that said, actually, you know what? Now that I look at this, is this right? There's multiple ways to do this. There's multiple ways to do this, but I do think that that's the more relevant way of doing it. Again, only relevant for the short term. That's going to do it for right now. Take care, and until next time.